my name is Mathew Owens. I'm a California licensed CPA and full-time real estate investor. And I can tell you when you are either borrowing money or lending money to someone else for your fix and flip project, there are a lot of pitfalls to avoid and be careful of so that you don't get punched in the face and lose money on one of those projects or just have a ton of headaches that you have to deal with along the way. So there's a lot of ways to mitigate risk as long as you know what to do up front. So there's some key things that we see as private lenders. We have over 35 million lent out to flippers in different markets around the country, and we utilize private investors and help them actually invest their money into these promissory notes, and then we actually help the fix and flip investor to secure the funds for their project so that we can help them be successful on the fix and flip. And so we see tons of problems that come with different borrowers or different lenders when they do it the wrong way. And so I'm here to talk to you a little bit about how to avoid those problems and make sure that you have a successful transaction and don't, take a hit or have a headache or just have a deal blow up on you that you could have avoided by doing the right homework up front on those deals and making sure you're working with the right people, okay? So the first thing that to be very careful of is who are you doing business with in the first place, right? Who is the person lending you money? And then on the other side, who is the person you are lending money to, right? You typically want to make sure that that borrower is fully has experience across the board. You do backgrounds and criminal checks on them to make sure that you're lending to the right person. Do they have the team in place? Do they understand their numbers on their flip and everything? Do they have enough cash reserves? All of the things that go into the borrower to make sure that they're the right fit, that they have the right systems and team to be successful on that job, right? And then when you're borrowing money from someone else, there's a lot of investors that go out there to private lenders because it's easy, but a lot of times private lenders run out of money, right? They have issues in different ways. It's hard to, consistently deploy your own capital and have it all invested and then have additional demand for that coming up on the back end unless you have ways of recapitalizing your money. And so a lot of borrowers end up in the situation where they got some private lenders in place, but then they end up running out of money because of, whatever limitations those private, investors have, right? And so it's kind of a juggling match, right? And so being able to know that that private lender can consistently fund, that will do what they say they're going to do, will close when they say they're going to close, be able to do the homework on time for those deals is all part of that due diligence any borrower should do on the actual lender and themselves, okay? So that's, one big piece is who are you doing business with. Whenever you're dealing with these types of loans, you want to make sure that you can get that deal closed because your reputation is on the line for doing that, okay? So now the other big thing that we see borrowers having issues with and lenders having issues with is the making sure that the borrower has enough reserves up front on those deals, right? So making sure they have the money for not just the down payment piece, because most of the time you're dealing with, somewhat of a down payment on the purchase price, and then 100% of your renovation getting funded. And then of course you have interest costs, you have holding costs, property taxes, insurance, utilities, you have renovation overages that consistently occur. So you need to build that in up front. And then in addition to that, the borrower, typically in a private loan situation, if they're putting up the usually the renovations money sitting over here, and then the borrower puts that money in first and gets reimbursed. And so in those types of situations, you want to make sure that the borrower has enough money to put the money in for the renovation up front before they get reimbursed. So maybe 25% of the renovation project they should have in reserves in addition to their renovation buffer, in addition to their interest reserves. So there is some capital requirements when you're dealing with these, and this will stop a headache long term, right? What do they also have? Interest reserves set aside, so they have extra timeline buffer there on their interest costs in case things go over, because there are timeline delays quite a bit in real estate, of course. So those are some of the big things that happen when you're lending money or borrowing money. Now, one other giant thing, okay, a lot of borrowers and lenders are wrong on the market values of these assets. Even sometimes the appraisers are wrong because they may not understand the full situation. That entire neighborhood, for example, maybe they're from outside the neighborhood and they don't know that that block sucks, and then everything else around it might be okay, but that block is not a great block. And so understanding and looking at your numbers in detail and verifying with that appraiser, what that appraiser says, and making sure you're backing it up by actual outside comparables and you agree with those numbers is really, really key, right? And so we see a lot of borrowers being wrong on their market value. They're not taking the time to pull individual comps, individual MLS comps, and off-market comps to get a full picture of what's happening. And many times you want to actually even go back and get rental comps too on top of that. So to make sure that you know what your downside risk protection is when you're lending capital, and what that property will rent for if, for example, your flip doesn't work out and you need to rent that property, and what that's going to do. Is it going to break even on cash flow? You're going to be losing money every month. You're going to be stuck with capital in the deal. So all those things are important to analyze up front on your deal, right? And making sure you have the right cash reserves is absolutely key. Making sure you have the understand the right market value is key, and then making sure who you're doing business with is key. One big additional thing is being wrong on your renovation numbers. So many times we'll go get a feasibility study done when someone comes with a big renovation or an older building, because many times there's things that are missing that either the borrower forgot or the lender forgot and didn't notice when they're doing their inspections or looking at the pictures, or doing their homework on that particular deal. And so making sure that you dial in that rehab is key, and that your contractor is very, very clean with their bids, because the lenders going to want to see that outline. They're going to see the full breakdown, outside, the inside, the major systems of this asset, to make sure they can see what what this deal needs, what kind of work is needed on that project, right? So real key things to understand on that renovation, and making sure that's broken down right, and making sure you have a good contractor, doing the background homework on that contractor up front, doing background checks, criminal checks on them, getting rehab bids from them up front and seeing what their rehab bid templates look like to see if they're put together or not on those deals. All that is super important when you're analyzing your deal up front and finding the right team, because your contractor will destroy you and destroy the whole flip if they're not a good team member on your team. So that team member is the most key when you are dealing with fix and flip type projects or lending money on projects, right? So these are some of the things that I think are absolutely key. And then, of course, not having the paperwork together up front. There's some timeline issues with these types of deals, right? So many times you have to close in a couple of weeks. So that means you got to get the appraisal ordered. You got to get the application in. You got to make sure you have your backup documentation, like the purchase contract, right? Or the corporate documents, your bank statements, that renovation bid. And sometimes you got to dial that in after the fact as well if you don't have that, all perfect right away. And you want to get that deal into underwriting immediately so you know what your numbers are really going to be, right? What about having property access to this for inspections and appraisers and things like that, and coordinating that inspection process, right? Pictures and, all of that stuff that goes into the underwriting process is super important to be successful on your transaction whenever you're borrowing money or lending money. And the lender needs to be Johnny on the spot with this stuff too, right? They need to make sure that they are reviewing this stuff timely. They help order those appraisals, push this along, make sure they got insurance and title taken care of, and the processing piece of that loan done in a timely fashion so that they can be successful at closing on time, because 2 weeks, while it might sound like a little bit of extra time, is not that much time when you're dealing with title and insurance and appraisers and dialing in rehab bids and things like that. So this transaction needs to be perfect for you to go through that and make sure that you are successful at closing that deal. And if you're trying to lend money on these types of flip opportunities, you need to understand understand the processes, have your paperwork in order, and make sure that you're, protecting both you and the borrower with the right due diligence on that deal. So, and you have that proper communication and know who you're doing business with. So thank you guys so much. I hope you guys enjoyed this content and found it valuable. You guys can reach me at MathewOwens.com with one T in Matthew, MathewOwens.com. Thanks so much, and I hope you guys got some value out of this. Talk to you soon. Do you want to learn how to create financial freedom in your life through real estate and take your investing business to the next level? If so, you can follow us in one of the following ways. First, you can take one of our free webinars on how to analyze property, how to raise capital for real estate, and how to market and find deals. Three of the key pillars to becoming a successful real estate investor. Number two, you can join us on our mailing list where you'll get tips and tricks on real estate investing directly to your inbox. And number three, you can take our 6-month real estate course that teaches you every aspect of real estate investing you can think of, and more importantly, create financial freedom in your life through real estate investing strategies that I teach. If you want a master's in real estate in 6 months, this course is for you. We're going to go over how to raise money, promissory notes, syndications, fixing and flipping, buy and hold investing, tax and legal structures, self-directed retirement accounts, financial education, how to run a business, how to market and find your deals, and most importantly, how to create that financial freedom in your life so that you can stop trading your time for money and create passive real estate cash flow that you can live off of. If you're interested, go ahead and click on one of the links below, and I look forward to seeing you guys on the other side.